Alright guys, we're going to talk about the IRS today. If you would ever spend time in the comment section on my YouTube channel, you would read probably 200, 300, 400 comments about how I like to take money from the IRS. And it seems to be a common myth or a common idea that every laundromat owner in the United States secretly takes money out of his machines, puts them in his pocket, and then goes on to not tell the IRS. Because theoretically, that would be a good thing. I mean, don't tell the IRS I said this, but just think about it for a second. You make this money, you don't pay taxes on it, you put it in your pocket, you go buy whatever you want to in cash with Ben Franklin's or more likely George Washington's in the case of a laundromat. But what's interesting to me, or something that you guys have requested that I talk about, is all the situations that I've run into, both with businesses that take cash out of their daily transactions, and why I don't do that with my laundromat that I do videos on. If you like this kind of hillbilly laundromat man content where I kind of give you the real scoop on things, be sure to like and subscribe to the channel and hit the notification bell, maybe if you end up enjoying this kind of thing. And this video will also dispel the rumors that I'm involved with the mob anymore and I cheat the IRS. So we're going to talk about all of that stuff. And once again, the video comments are all through that I take money and secretly hide it in my pocket. Now, one interesting thing is, this is the point in the video where I should start off and say, none of this is true. Of course it's true. Let's be honest. People buy laundromats all the time to avoid money with the IRS. One wonderful benefit of owning a laundromat is that you can depreciate the expenses or the purchase of the real estate and the machines. As it is right now under U.S. tax code, they also have something called bonus depreciation, where when you go in and you buy a laundromat with the equipment, that you can actually take more than the cost of acquisition of your laundromat equipment off. The last time I talked to my accountant, it was around 120% for a washing machine. Meaning if you buy a $10,000 washing machine, you can actually take $12,000 off your taxes. And if you do it right, or you want to schedule it a specific way, you can take it off the first year you spend it. So let's say you have $100,000 in income and you want to, and it's net profit, and you want to take that off your taxes. You could essentially go out, get a loan for the machines, and take $120,000 off your taxes. Now, having said that, there's a lot of caveats, and you have to make sure that what you do is correct. So I would recommend that you can consult a CPA, a certified public accountant, because I am not one of those. My accountant is a wonderful guy. He owns real estate and runs businesses, and he's great at getting my taxes. So right off the bat, that recommendation on bonus depreciation should be enough for you to think, well, okay, there's some write-offs with laundromats. In reality, the U.S. government and the IRS is extremely beneficial, extremely positive on you owning a business and writing expenses off legally for the business that you own, and you can use depreciation to lower your tax liability immensely. Every time I pay a bill, water, gas, electricity usage for my laundromat, I buy equipment, I can write all those expenses off. When it all comes down to it, I don't have to pay a lot of taxes on the laundromat. Yet, if we were honest, I have run into many laundromat owners who say that's a wonderful benefit. Now, I won't say who does it, but it is a common thing. If you get on the Coin Laundry Association or the laundromat owner groups on the internet, you'll find that it's a very common thing, and it represents a two-edged sword. And what I mean by that is, you've purchased a laundromat, you find that when you start looking for laundromats, that a lot of laundromat owners lie about their income. You get on the user forums, Coin Laundry Association, you find that you have to employ alternative means to value a business. I ran into one laundromat several years ago that made $10,000 on paper. The owner took me aside and said, well, Brandon, that's not really what it makes. And through the negotiation period, it totally fell apart. And a giant shout out to the Ridge Wallet for sponsoring this video. This is my actual real life wallet. It's carbon fiber. They've got a wonderful warranty on it, and we really appreciate their help in supporting this channel. So if you're looking for a wonderful option for Father's Day, get on the links below and order your Ridge wallet now. To this, I've got a wonderful story about what I'll turn on in the background for you. And just like that laundromat, I looked at the books of a convenience store. It is not this convenience store / Sunoco gas station, but it was a gas station with a convenience store. And I was taken aside by a much older, well-established real estate investor, and he said, Brandon, you need to buy the Sunoco gas station down the street in such and such a town. And I said, okay, why? And he said, Brandon, it makes $250,000 a year. I said, okay, that's great. And he said, there's one caveat here, Brandon, that you need to be aware of. On its tax statement, it only makes $50,000. And I said, what do you mean by that? And he says, well, Brandon, here's the deal. Every single night, the owner of such and such gas station in such and such town in the state of Ohio goes into the business and he withdraws several $100s every single night from the safe. Then he reports a significantly lower amount of money to the IRS, and then he takes off, and now he's finally reached this point in life where he's about 70 years old. He doesn't want to run the gas station anymore. He's been doing it for about 20 years, and he would like to find a young entrepreneur like yourself to take over the business. I said, well, that's cool. How much money does he want for it? $500,000. Now, do the math real quick. That's a 50% return. He worked at the location as a manager, but he also had staff under him. And I guess everybody was in on it that they pulled cash, they stripped cash out from the business. Once again, I get accused of this all the time, but I don't do it. And we're going to explain why here just in a minute. So this wonderful gas station that was selling gas and supplies and everything like that at an obscene pace in this small town in Ohio, decently far from me. I really didn't want to drive there every day if I was to buy it. But I asked him, I said, okay, so tell me how I get this wonderful opportunity to screw the government. And he said, go find an investor, Brandon. And my immediate question to him was, why can't I get a bank? And he said, well, you know what happens when you lie to the IRS, no banks will loan money to you. So you have to find somebody that'll pony up all the cash to buy your gas station / convenience store. And I started thinking about that, and I thought, well, that's a really screwball deal now, isn't it? Sure, he has saved money by lying to the government on his taxes, but then again, the amount of money he could have written off legitimately for the business through depreciation, which is a wonderful, delicious thing. He could have written off depreciation and expenses legally without lying to the government, and he would have had books that would have shown maybe not $250,000, $250K. Maybe after paying the government, he would have been able to show a profit of $200,000. Let's just ballpark it here. And so there was a rigmarole that I went around with this individual that knew the elderly owner of the gas station, and there was no way to do it other than ponying in $500,000 to buy a gas station that one would have to work at just to get back at the government and the IRS by proxy. Now, with as thriving of a business, what do you think happened to it? Now, we're getting to a little special part of this story. This was 15 years ago, about 14 years ago. The owner is now dead, which is why I'm telling this story to YouTube, because not only I'm pretty sure the statute of limitations have expired, the owner's dead. So what happened to the gas station? Did some other shady buyer come in and purchase it with greasy money from an individual of ill repute? No, it closed down. No one purchased it. No one in my region of Ohio was able to go in and purchase the business because no one was willing to spend $500,000 to make a 50% return, because there was no way realistically to certify the sales of a gas station, the gas sales, the convenience stores. He was probably stripping the cash from the convenience store more so than the gas pumps, because if you try and screw the state of Ohio on gas tax, you will freaking go to jail. I don't know how he got away with it, the IRS, but he did. for a while, or at least till he died. And this gas station / convenience store actually went under. The individual became so poor, became homebound. His health went down so severely, they closed up the gas station, and it has sat vacant and empty for years and years and years and years, and just fallen into complete disrepair to the point it's almost unusable anymore. Now, what that guy started off as trying to get out of taxes after it's all said and done very likely wasn't worth his whole idea or conspiracy or effort to try and get money from the IRS, because when it came time to sell the business, he wasn't able to do it, and it just fell into disrepair. He took his money, went away. And what's interesting is you run into this problem with many local small businesses. It's why I encourage you guys to sign up to my Teachable course at investmentjoy.com/teach, so you can write business plans to go in and buy businesses like this. And sometimes you don't even need cash with it. 15 years ago was a long time ago for me. I didn't know how to write business plans. I didn't know how to write business proposals. And it was a situation, knowing what I know now, I might have been able to get that gas station with convenience store, and I would have had a lifetime supply of Monsters. I certainly wouldn't take money from it, but I might grab a Monster once in a while, from the drink case at a wholesale price. But it's an interesting thing to me that there's all these working mechanisms where business owners like to think that they've got an inside track to making all the money in the world. And then later on, when it comes time to sell the business, they get screwed. Having a gas station with the real estate involved, with a thriving business, is worth tons of money. I have seen gas stations sell at a 5x multiple, which means whatever the net profit for the gas station is with the convenience store, it sells for 5 times the value that it makes, the net income per year. So if this individual would not have tried to screw the government out on their, let's say, $50,000 a year in taxes, he could have sold it for a 5x multiple, which on the instance of this gas station would be $1.25 million. For the most part, if he would have had a decent CPA who properly itemized expenses, properly depreciated the expenses like the gas pumps, contactless readers, whatever expenses they had, a pizza oven maybe, let's say, he would not have had to pay significant taxes. He would have had to pay something. He would have had to be honest with the IRS and the government, pay some taxes, properly depreciate, employ a good CPA, but instead of not even getting $500,000 for his business, he would have easily got, from my perspective, $1.25 million. Instead, he went under. And I continue to find businesses all throughout my wonderful state of Ohio where owners have tried to get an inside track. They've made poor decisions, and their businesses are falling apart. My buddy Sean recently purchased a local business for $15,000 down with real estate, multiple employees, multiple vehicles, inventory, a website, and in one day he made over $15,000. I know it's hard to believe, but it is possible, and I promise that you guys can do these things. One tip, don't try and screw the government, because in business, you have to learn to work with the government and not be their mortal enemy. I know I'm going to get a lot of comments and say, oh, you have to. You can't run a business without making the government at least somewhat happy, and I'm here to tell you that you can. But education and learning about the ins and outs of businesses will give you a phenomenal advantage when it comes time to acquiring businesses from older people. As the older generations retire, pass away, or get out of business in some way, these kinds of business opportunities will present themselves to younger people, millennials and Gen Zs like me. I'm not a Gen Z, I'm a millennial. My kids are Gen Z though. But you'll be able to step in to take over these businesses, but you have to educate yourself on accounting, marketing, taxes. You have to be willing to work at those things, and it won't be super easy, but I promise you, with enough research and education and taking time out of your day to learn about boring things like marketing and accounting, I promise that you can do it yourself. Yes, the person that's watching this on their mobile phone, wherever you are, you could find yourself someday buying a convenience store or a laundromat like mine, and you won't even have to take the money out like some people think they do. You'll learn to put yourself on payroll and pay yourself with dividends. Maybe you'll set up a SEP IRA and make tax-deductible contributions. You'll learn about things like bonus depreciation and depreciation, getting mortgages, paying, insurance. Maybe you can write your insurance off. So once again, just think about these things. Be sure to sign up with Webull, where you can still get up to $1,400 in your free stock. We've already had one person get a free share of Apple valued at $300 on our Discord channel. We do have a Discord channel. Thank you guys for watching, and I hope that you guys will consider maybe buying a business like this, or maybe a laundromat, or starting your own vending business. Be sure to sign up to investmentjoy.com/teach for longer format shows like this that are even more nerdy about Excel and how to market. Thanks, guys.